Chapter 12, Qualities of a Good Research Report. Learning Objectives. After studying this chapter, you should know about Essentials of a Good Research Report. Checklist-based approach to writing research reports. Qualities of a Good Research Report. Research report is a multi-purpose document and does the following. Presents an investment idea, provides market perspective, detailed company analysis. All the research analysts have access to, more or less, the same information, that is, annual reports, quarterly reports, etc. In fact, all good analysts and experts of a sector have similar things to say. So how does one stand out and be the best? Research analysts make a difference by the way in which they present their views, conclusions, and recommendations. The communication aspect of an analyst's job is as important as analysis, of which writing research report is one. Writing research reports, to an extent, is a creative process. Creativity in the sense of how one structures the report and communicates the message. What an analyst does is to take in is a lot of financial information and give out is an understandable version of what that financial information mean. The process of converting numbers to views does demand for the certain qualities. As with many other creative processes, there is no single answer to this question, but there are certain ground rules which one can follow to make a good report. Clarity of idea. Simplicity of delivery. Presenting the argument clearly. Narrative structure. Create customized reports according to the reader type. Writing a good research report, planning, drafting, and editing. Like any other writing projects, compiling research reports also have three important steps: planning, drafting, and editing. The major sections of a research report include company business, peer group analysis, shareholding pattern, key strengths, key concerns, industry overview, company fundamentals, key financial indicators, and financials. The writing process has to be planned as to how each section will be approached and assign a deadline to each. As there are many reports to be written and the workload shall be high near quarterly results season, it is important to maintain high levels of discipline, otherwise the delay can have a cascading effect on the work. Once done with the planning, work should begin on each section. Generally, each organization has a template of its own, and therefore working on a predefined structure makes the work a little bit easier. Almost all the sections of a research report are fact-based, and therefore filling them is more of a copy-paste function, but certain important sections require understanding of the business and thorough communication with management. Fact-based sections in research report. Peer group analysis, shareholding pattern, company fundamentals, key financial indicators, and financials. Source of information, annual reports, quarterly reports, calculations. View-based section in research report. Company business, key strengths, key concerns, industry overview. Source of information, communication with management, personal understanding of the business and industry. It is also suggested to make use of data visualization software and prepare visual charts to present the data. Visual data is easier to understand than written numbers. Once a draft is ready, it should be rechecked for financial figures, spell checks, and grammatical errors and edited accordingly. Things to watch out. There are thousands of reports prepared after every results season, and only a few of them get the attention. What makes the other reports fail? After observation of many years, the following are a few reasons that are listed out for failure of a research report. Unnecessary details. Long sentences. No proper structure. Inconsistent views. Complex language. Rating conventions. In financial markets, while rating stocks, various conventions are used by the research analysts. The prevalent recommendations include buy, overweight, hold, underweight, and sell. These recommendations are typically made to reflect the analyst's view on the total returns that the security will make over a specified time horizon, or the returns of the security relative to the returns of the market or to the peer group. Different research agencies may have different definitions for each term. The interpretation of the recommendation is also typically mentioned in the research report for the immediate reference of the user. For example, a buy may indicate an expectation that the stock will deliver more than 10% returns over the next 12-month period. Hold may indicate that the stock's return is expected to range between -10% and 10% over the next 12-month period, and a sell recommendation may indicate an expected return of less than -10% over the period. Analysts also use recommendations such as accumulate and reduce to reflect a view that triggers for the stock's performance is expected in the defined time frame, which will result in the returns materializing. Outperformer, performer, or neutral, and underperformer indicate the expectation of the stock's returns relative to the sector or market. The analyst may even indicate the expected level of out/underperformance. Overweight, equal weight, and underweight are ratings used to describe a stock or sector's performance relative to the market. An overweight rating indicates the expectation that the stock or sector will perform better than the market, while underweight indicates a relatively poor performance and equal weight indicates performance in line with the market. It is important to be clear about what the analyst is saying through the recommendation before taking action in line with it. Checklist-based approach to the research reports. In the era of information overload, it is easy to drown in the ocean of information around. Also, sometimes information available at different places is contradictory. To ensure consistency in the decision-making process, it becomes imperative to note down important decision drivers in a disciplined and committed manner. Please remember that market rewards disciplined investing and often punishes emotional, distracted, and disorganized approaches. Accordingly, checklists could be a great way for analysts to stay disciplined and methodical when it comes to researching new ideas, maintaining an existing portfolio, and exiting positions. Just as airline and military pilots have used checklists for decades to eliminate avoidable accidents and produce better results, so too can investors use checklists to develop better and more consistent investment behaviors. Obvious advantages of checklist approach are: checklist helps avoid lazy mistakes or shortcuts. Checklist ensures that an analyst always does what he or she intends to do in a disciplined manner. Checklists help in objective and facts-based decisions. Checklists leave a decision-making trail that can be modified and corrected with time. In a popular book, The Checklist Manifesto, author Dr. Atul Gawande makes a distinction between errors of ignorance, mistakes made out of ignorance, and errors of ineptitude, mistakes made because of incorrect use of knowledge. He argues that errors of second type can be avoided to a large extent by following a checklist approach to literally everything in life. A sample checklist for investment research reports. Here is a sample checklist for investment research. We must state that the questions given in the checklist are only indicative in nature, and readers may add/delete/edit the questions to the checklist as per their requirements. Financial parameters taken in the quantitative section are also indicative only for reference purpose. Qualitative parameters. Do I understand the business? Details of technology collaboration, if any. What's the revenue model? How does business make money? What is segment-wise revenue contribution? And how it is supposed to change going forward? Output is a necessity or a choice. Can other industry/business challenge this industry/business? Is there a product substitute? If yes, which and to what extent? What are distribution channels? Marketing infrastructure? Is the business replicable/scalable/good franchise business? What is demand, supply gap in the industry and sustainability of its gap? How does business look like a decade down the line? Would it be existing and be more valuable? What is the moat/competitive advantage/niche/differentiation of company and sustainability of these characteristics? What is downside/risks in the business/company/industry? Does the company have output pricing freedom/ability and sustainability of this pricing power? Are inputs available without interruption? Pricing power of company on inputs and sustainability of this pricing power. What is the level of competition in business? Major competitors and companies' position vis-a-vis competitors. Are entry barriers in business significantly strong? What is the quality of management? Able, honest, and with good integrity. What is promoters' stake? What are insiders doing? Buying/selling by promoters and top management. Any pledge of shares by promoters. Any buyback by the company in last 3 years. Any major observation from corporate governance report. Present shareholding pattern. Changes in shareholding pattern over last 5 years. List of top 10 shareholders with percentage shareholding. Is there a catalyst in business? Can a fool/idiot run this business? Business is simple, output is a necessity, and competition is not tough. Strengths of company. Weaknesses of company and how company is handling them. Opportunities to company and how company is tapping them. Threats to company and how company is handling them. Quantitative parameters. Equity history and important points. Has the revenue been growing consistently? Do we have visibility of revenues going forward? Whether business has stable and growing profitability, NPM is greater than 10% and growth in EPS continuously over last 5 years. Whether business has low leverage, debt to equity is less than 1 continuously, and interest coverage is greater than 3 continuously over last 5 years. Whether company has stable and growing return track record, ROE is greater than 15% and ROCE is greater than 15% continuously over last 5 years. Whether company has stable and growing minimum 5 years dividend track record. Whether company has good cash flows, positive operating cash flows and positive free cash flows continuously over last 5 years. Any important/notable auditor's qualification. Any important observation from notes to accounts, intangibles, MTMs on outstanding derivatives and guarantees, etc. Any change in the accounting policy with impact on P&L and balance sheet. What are company's CAPEX plans in near future and how does company propose to finance that? Incremental capital, equity, and/or debt planned. Is the company financially disciplined? Am I buying this business for quality of assets, earnings, and cash flows? Valuation parameters. What is valuation/intrinsic value of the business? How confident I am on valuation? Is business cheap relative to itself, peers, and market on various valuation parameters: price, PE, price to book value, price to sales, etc., over a period of time, last 5 years? What justifies margin of safety, MOS? Business is available at what discount to its intrinsic value? Reasons of market mispricing and likelihood of correction. Final decision parameters. Sample research reports. www.bseindia.com/investors/research.aspx. www.nseindia.com/content/corporate/EQ_research_reports.htm